this point, you've been through approximately 10 hours of the foundational e-course. And while the e-course itself goes from fairly simple to fairly complex, what we're going to end this with is the last day of March and the first day of April, 2021. And we're going to show you some very complex days. And these are the type of days that have historically given me a great deal of problem and have led to some fairly significant losses. What happens is the market generated information overall is correct. However, there are smaller pieces of market generated information that tend to get in our way and get us too focused on the very short-term pieces of information, and we overlook what is more important and what is more relevant. Also, this situation we're currently talking about occurs most often in the later stage of a market rally, in a particular stage where the momentum traders, the non-institutional, non-large size momentum traders, have gained control of the market. We tend to focus on too much on the very, very short time frame, and we miss the bigger picture. Remember, we always start by reviewing the monthly bar, the weekly bar, and the daily bar. As we prepare for these 2 days, the monthly bar has been one time framing higher for the past 6 months. So the trend is clearly up. So as we start, we always begin by reviewing overnight activity. And we've talked often, if overnight activity is long, the odds of a counter auction, meaning a correction or selling, is about 70%. But what is important, if you don't get that counter auction, that is a sign of short-term strength. So as we get prepared to trade the 31st, you can see the settle in overnight inventory is long. So notice that immediately the market starts to trade higher. Now let's stop for 1 second. Since early in the morning, we're trading higher. Look at the high from 329. And you'll see that the high from 329 has no excess. So it's a non-excess high. Above that high, you have the 317 high, which is the previous all-time high that was established during the daytime frame market. And above that, you have the all-time high, which occurred during the Globex hours. As we have talked so often, it is a rare occurrence that the market makes any substantial lasting correction when the Globex high has not been taken out. That doesn't mean it can't happen, but the odds are against it. So as we go back to trading on the 31st, overnight inventory is long, and early on we are not getting a correction. So we want to watch this very closely and be prepared to go with this to the upside. Like I say, it can be counterintuitive because so many times when overnight inventory is long, you get a counter auction. Additionally, if you look back on the 30th, you have a prominent point of control at the 39.4650 level, and we know that it always presents high odds of being revisited. So when I say counterintuitive, it takes a lot to be able to go with this trade in the morning. It's very difficult to go with it because you're thinking about these other things. But remember, when you don't get a counter auction relative to overnight inventory, that's a sign of short-term strength. So as the markets open in the morning, and we're playing at 5 times normal speed. So the first thing, you should be long this market. And I understand it was a very difficult situation because you're looking at overnight inventory and you're thinking of things that normally happen. Trading requires mental flexibility, and you have to be able to be in touch with the market and go with what the market is providing for you. So as this market during A period, remember we're going through 5 times normal speed, the next upside reference, of course, will be the non-excess high from 329. So at this time, let's go ahead and let's speed this up to about 15 times normal speed. So remember, early in this morning, you want to go with that trade, but it's a difficult trade mentally. It feels counterintuitive to you because of the overnight inventory and particularly the prominent point of control from the previous session. Now, if you're thinking a little bigger picture, you're focused on the fact that you don't have any excess from 329, so that's clearly in view. So there are other information here, but the earliest information you normally look at is what happened overnight. So it's a very difficult time for you to make the correct trade. And a lot of times people ask me, well, what is the process for getting long? And I don't have any of that. You go long, you get long. Too many times we miss great opportunities because we spend too much time trying to find the exact place to get into the trade. When you get something on like this on the upside, get on the trade. Okay, so we're now we're just about ready to go to B period. We have a buying tail. The single prints is they are a form of excess. So we do have excess. Value, the odds are pretty good. Value is going to be higher. For value to be anything else, we'd have to break pretty sharply because you need time. You'd have to go down into yesterday's value area. Okay, so the market continues in the second period. And of course, as we said, the non-excess high from 329 is where the logical place for the market to go. So now let's go ahead and let's move this up to about 30 times normal speed. So we're going to be moving pretty quickly here, and we'll stop and start a few times. But you can see the logical destination trade right now would be that non-excess high. Now, it's hard to see when we're playing at this rate of speed. The tempo on this day to the upside was very slow. Remember, we're playing, what are we at, 30 times right now?
Yes, 30 times.
So we're at 30 times, so you don't notice the slow tempo right here. But I will tell you the tempo was unbelievably slow. So remember, at this point in time, we're almost to C period. So we've been an hour. Now we come back and we see that the B period and C period lows are exactly at half back at this time. So let's stop for 1 second. Okay. This is where it gets very difficult because when we look at that and the B and C period lows matching and being exactly a tick above half back, that's not very strong buying. And that creates pretty good odds that we're going to come back through that level. But again, remember, these are only odds. And the bigger picture, the B and C period matching lows is an important piece of daytime frame information. More important, however, is value. And value is building higher. And you also want to observe one time framing. Remember, one time framing is a really important concept that we watch for daytime frame traders. Okay, let's go ahead and continue to play at 30 times. Okay, so now we come back up and let's stop for 1 more second. Okay, so we said the odds were that we were going to get back and take out that non-excess high from 329. That has been accomplished. At the same time, notice that the C period high is exactly at the prior pit session high from 317. So the odds are that we will go back through that 317 high, because if you think about it, no matter what that day looked like, there will be no excess up there at the all-time pit session high. Since today's or the 31st high matched the high of the 17th, there will be no excess. So there's good odds. So if you take our small pieces of information, good odds that we're coming back through the C period high, the BC matching lows, this becomes more difficult. Remember, at the time, they were exactly at half back, one tick above half back. In the earlier part of the foundation course and in the primer course that we teach, we focus a lot on how to monitor developing value. And sometimes you have to remember where things were. And traders forget that. It's easy to forget that the BC lows matched and we're at half back. Good chance they're coming back through that. Once you get range extension to the upside, remember, every 2 ticks of range extension to the upside is going to pull half back 1 tick higher. Okay, so we're going to continue to play. The odds are very low that we're going to keep the C period high because there's no excess there. The next upward objective would be to get to the Globex high from 317. Okay, so now we're at 30 times normal speed. Remember, tempo is very slow in this day. The slow tempo gets you thinking negative on the market. And as I watched this day, what I was recording was that the risk of being long on a short-term basis was increasing because of the slow tempo in here. Okay, so now we're continuing to play at 30 times normal speed. Again, we did take out the 317 high because it only took it out by 1 tick. There is no excess up there. You need at least 2 ticks, and there would be no excess today, and there'd be no excess when you matched it next to the 17th. We look and we are still 1 time framing higher. Now, volume was not setting the world on fire. Tempo was very slow. So I remember sitting this day. I mean, I was feeling very uncomfortable. I knew the position was long, but it was a terrible feeling to be long, very uncomfortable. It felt counterintuitive to be long because the tempo was so slow. But when you come back and say, okay, we're 1 time framing higher, there's no excess on the high. Now, let's stop for a second. We now have D and E period matching lows to go with the B and C period matching lows. So now we're adding even more evidence to the odds that we will get a break in this market later on. So here's where it's difficult. Some of this very short-term information, the BC matching lows, which were exactly at half back or 1 tick above it, the matching DE lows suggest that we've got good odds that we're going to get a liquidating break in here today. The CD non-excess high gives us strong odds that we're going to take that high out before the day is over. So we're getting some mixed messages in here. Okay, let's continue to play. This is very difficult to mentally keep this together in your mind. I promise. I mean, I traded this day. It was excruciating. It's hard to get long because the tempo is slow. The downside references are slow. They look like they should be taken out because they're so mechanical. Okay, so we said, there we back up now. There's absolutely no excess at all. 317 high. The market's through that We're one time framing higher. The next goal is, of course, to take out the previous Globex all-time high. Now, let me stop you for just a second. Trading is a performance activity. Any performance activity, whether it be football, whether it be competitive bridge, if you're playing competitive bridge, you go back and you want the history of the opponents you're going to be playing. What kind of characteristics and nuances about them? You're playing tennis, you want to look at the game films, or you want to make sure you understand what the strengths and weaknesses of your opponent are. Anything that's performance in nature, people spend a lot more time behind the scenes than they do participating in the activity itself. And where I'm going with this, if you look at the way we have our chart set up today, all the references have been put in there ahead of time. Prior to the market opening, we've reviewed those references, so we have a pretty good understanding of what the roadmap in front of us looks like. Without that, it's very hard to keep a perspective anyhow, particularly the market's going up, volume's not outstanding, the tempo is slow, we've got mixed messages with the B and C low, the D and E low. If you don't have a good picture, you haven't done your preparation ahead of time, it's going to make this much more difficult, much more confusing. Remember, we're going to see a lot of counter information today and this day and the following day. We're going to see different results at the end of each day. But let's continue to play on the 31st, please. Remember, we're 30 times normal speed. So, I mean, you don't really feel the slow tempo, but it's very, very slow. So we're 1, 2, we're in the third hour. Market's going higher. It's one time framing higher. So you can see, I mean, just the market is very visual. Traders are very visual. They can see, they know where the previous all-time high was on Globex. I remember one trader I used to trade in the floor with, he had 27 numbers on average that he walked into the crowd, that he'd rehearsed. He had them on a little trading card. So he knew, traders know where these numbers and where these levels are. Okay, let's stop for a second. Okay, at this point in time, we have no excess at the previous Globex high. As we said, made the same comment when we got to the high of the 29th. We said there was no excess. Now there's no excess at the all-time high in the market because today's high, or the 31st high, has matched the Globex high. All right, let's continue to play. Remember, we're 30 times normal speed, so we're going pretty rapidly through this. And I continue to remind you, much of the conflict today is tempo is unbelievably slow, even though when you're playing 30 times speed, you don't recognize it. It doesn't jump out at you as easily. Okay, so still no excess. Now, what I want you to watch in here is how mechanically the market keeps backing off to almost exactly the previous Globex overnight high. I mean, this went on for, I want to say it was someplace in the area of 2 to 3 hours. Okay, speed it up to about 50 times. So notice this, it keeps coming right back down to that level and bouncing. Change time periods. We're still one time framing higher. So being 1, 2, 3, 4, 5, 6, 7. This is the 8th period. We're still one time framing higher. So you see what's happening. They got above the previous Globex all-time high. That brings in stops, brings in more buying. stop for just a second. One of the things that we talked about several times, and I don't know how many times we've mentioned it in the e-course, but you need to understand that the most common form of trading in the world is momentum trading. And the reason that's the most common, it is the easiest. And when we say momentum, it's just simply people are trading based upon price momentum. They don't do a lot of study what's underneath it. They have an attitude that everything you need to know is embedded in price. And of course, we are just the opposite of that when we're looking at market generated information. So we don't fight the momentum traders. And we break this down. Let's say you get a rally that starts as a momentum rally. You will recall we've referred to the diffusion model. It starts with the innovator, the early adopter, early majority, late majority, and then finally the laggard. So particularly in the early majority and late majority, your market generated information in most cases is going to be pretty supportive of the advance. So you're going to be in harmony with good, strong momentum buying in the real fat part. And that's where most people make their money, within the early and late majority. The risk comes when you get into the late stage, or what I call the laggard stage, where everybody knows it's going up now. And so everybody comes in, they may have waited for years or months, and now they're finally assured that the market's going higher. So these are where the laggards come in. This is where we start to look and see, do we get a divergence between what the momentum market is telling us and what market generated information is telling us? So let's just review market generated information today. First, I'm going to review the market generated information that can cause a problem for you, or make you feel uncomfortable, or give you a counterintuitive feeling. The BC matching lows. We've seen very often those mechanical levels get retested. And remember, the BC matching lows at that time were exactly at a half back, followed by the DE matching lows. Again, good odds we come back. And what you're asking about is just because the traders were mechanically buying at a previous reference. Same time, those are smaller pieces of information. A little bit larger, volume was okay, but it wasn't outstanding. So higher prices weren't bringing in substantially more volume. Now on the other side, we are one time framing higher. That's always a pretty good sign of some pretty healthy buying. Now, we've talked earlier about smaller pieces of market generated information, and this is where you get into trouble. So many times, short-term traders focus so hard on these smaller pieces of information, they overlook the fact that value is clearly higher today. They get so focused on, we talked about the BC low, the DE low, and the slow tempo, and all those things are important. But the bigger piece of information is value is clearly higher. Okay, let's continue to play. 50 times normal speed. Watch this market back and forth at almost exactly at the previous Globex high. Okay, once again, no excess on the high. No excess on the high. Look at this bounce, almost right off of the previous high. Look at the mechanical nature of this once again. Remember, we're at 50 times normal speed. No excess on the high. The I period pullback low is extremely questionable because it's exactly at the old Globex high. J period trades exactly at that level. Okay, now we've taken it out by 1. All right, so now we've shown the cessation of one time framing. back and forth through that old Globex high. Remember, we have no excess at the all-time high now. Very important to keep track of that. Okay, now remember, we're at 50 times normal speed. So we've got J, K, L, and M periods left. So J, K, back and forth the previous all-time high from Globex. Still no excess. Notice the K period low is a single tick above the J period low. So that's the BC, DE, and now JK. We've got 3 sets of these mechanical, very mechanical levels. No excess on the high, back and forth through this previous Globex high. See mechanically what traders are looking at. Now look at the JKL lows. Look, 3 of them in a row, a tick apart. K is 1 tick above, L is 1 tick above. A lot of volatility. Now, let's stop here for a second. We're going to contrast today, 31st, with tomorrow, April 1st. There's going to be a great deal of similarities in these markets. However, there's going to be one difference. You're going to get a break, a late break here on the 31st. You're not going to get that break on the 1st. A lot of traders saw what happened on the 1st, come up on the 31st, where we are right now. Then they expect that same thing to happen on the 1st, and it doesn't materialize. I personally know several traders that got hurt pretty badly on the following afternoon, expecting the same thing that happens today. The difference is the amount of trading that you see going back and forth relative to the prior Globex high goes on. It's now we're at JKLM. So we're going into the 4th half-hour period. That back and forth trading gives you an opportunity to build up a lot more short-term inventory. And one of the things that we talk about is that traders, daytime frame traders, a lot of daytime frame traders go home flat, meaning no position, because of their own desire, while others have to go home flat because their clearing firm will not let them take inventory overnight because they're not well enough capitalized. So it's not uncommon to see a late liquidating break, particularly if the traders in the last period keep trying to get that last nickel out of the rally. If in fact there's no stronger underlying money to buy when they start liquidating late in the day, you get a liquidating break. It looks like a vacuum and the bottom falls out. If in fact there's more powerful money waiting there, they absorb that liquidation. So what you're going to see on the 31st here is there was no real underlying buying to support a liquidating break that you're going to see. On the following day, it was a different story. The following day, on the 1st of April, was somewhat different because coming out the next day is going to be the most important report of the month, the monthly jobs report. But it was a different atmosphere. So notice right now we have no excess on the high. We have tremendous trade. It's been for an hour and a half. We're now into the 4th half-hour period as M period starts. So let's continue to play, please. back through that level again. Okay, notice early on, we talked about some of the previous lows. Notice that the DE low is the only one that hasn't been taken out. Now it's been taken out. So we have taken all of those back throughout the session. Now here is, now you're in the end period, is the runoff period. Now let's finish the runoff period, and then we're going to talk about this day before we go forward. So the DE lows were taken out. Notice the BC low is not taken out. The DE low was taken out. The BC low was not. The end period runoff low is exactly at the BC low. Here's the complexity of trading a day like this and why it becomes very difficult. We said early on, the matching BC low, the matching DE low, and then, Jennifer, will point at the JKL lows. And remember, early on, it was JKLM. The odds were that that was going to take out. It was all very mechanical buying. Now, what makes it more difficult? You have no excess on the high, and then you have a series of JKL highs that are close together. So all day long, tempo was slow. All day long, it looked to me like the odds of a late liquidation break were very strong. But yet the market went higher and it didn't leave any excess on the high. When we play it back at 30 and 50 times speed, oh, you say, well, that's no problem. Believe me, it was an extremely difficult day to trade because the risk all day long, when you had the BC, the DE lows, and the JKL lows that we've talked about, and one time the JKLM, all of that increased the odds we'd get a liquidating break. But yet the market's one time framing higher. At the same time, value is clearly higher. So now as you end this day, think about what's going through your head. The last thing you saw as a short-term trader was a liquidating break. And if you're not careful, you take that liquidating break. And remember, when I talk about liquidation, you have liquidation, and then you have something that's more potent, which is liquidation combined with new money selling. If in fact you had liquidation combined with new money selling, that would be a much more potent combination. The odds would be very low if that were the case, that the BC lows would not be taken out. The fact that the BC lows were not taken out greatly increases the odds that what you saw was late liquidation in M period by those short-term traders that can't take inventory home. And what happens so many times, you get misled by that break, and as soon as the market reopens or shortly thereafter, it's higher because it was only liquidation, not new money buying. Tremendously difficult day to trade. The biggest piece of market generated information, the two biggest pieces of market generated information, no excess at the all-time high, which means the odds are low that's been completed, and value is higher. As a short-term trader, you get yourself trapped because you follow the BC low, the DE low, the JKL low, and you get so focused on those very short-term pieces of information that you lose the bigger picture and you walk the end of the day feeling somewhat negative. Okay, so this ends that day. Value is higher. We did not take out the BC low, and we clearly have excess on the bottom from the single prints, no excess at the high. Okay, so as we get ready for the following day, Very difficult, because the last thing we saw here was negative, right? Last thing we saw was negative. This is what comes into trader. The last thing they see is this. And one of the reasons that I talk so much when I do my research, as soon as the short-term trading is over at the end of the session, I immediately go to the longest time frame, which is to the monthly bar, weekly bar, daily bar. Because what I'm trying to protect myself from, at the end of the day, think how easily you could be thinking very short-term, very narrow here. So I have to break that syndrome by immediately going to the monthly, weekly, daily bars. Whoop, that gives me a whole different picture, because the monthly's been one time framing higher, and we're going to go into April tomorrow, and that would start the 7th month of one time framing higher. And we have no excess at the all-time high, and value is higher. Okay? So as we get ready, this is where we leave on the 31st, the end of March. We're going to next show you April 1st, which is the day before the monthly jobs report. So keep in mind, what we've tried to show on this first day is the difficulty of getting mentally trapped and losing your mental flexibility and being engaged in counterintuitive thinking because of very short-term pieces of information. I'm showing this last because this is what has given me the most problems over the years, the biggest losses, and have really destroyed my confidence. Okay, let's now go and let's take a look at April 1st. In the first half of this recording, we were like the local play. We've done some foreshadowing. We've already told you that we got the liquidation break on the 31st, and we went ahead and said, you're going to have some similarities on the 1st, but you're not going to get the late liquidation break. And the reason that is important is that what happens to traders so many times, traders do what works until it doesn't work anymore. We were doing an educational webinar on this morning prior to the market opening. And one of the questions that we were asked was, the odds are we'll get a liquidation break like we did the previous day, like you saw in M period in the previous day. And my comment to that was, when you have that fixed in your mind, you already have a picture of what you want to have happen and the trade you want to make. When you're asking that question now, what that communicates to me is that you really don't have mental flexibility. And if it works out the way that you want it to work out, you'll be just fine. If it doesn't, the chances are you're going to get run over because you'll try and execute that trade and the market does just the opposite. So as we begin to play this day, remember we've talked before about the importance in anything that is performance-based of having done your preparation. And part of the preparation when we come in to trade April 1st is that there is no excess from the 31st, and the 31st now represents the all-time high. It would be very unusual, not impossible, but it would be very unusual to end an auction with no excess at the all-time high. So all the trends are up. We're starting a new month. So we're going to start playing this month at 5 times normal speed. You can look at the overnight inventory. You see overnight is a very prominent point of control. It's 14 wide down near the bottom. And the settle is just slightly below that. So we're coming in to the first with overnight inventory being long. So let's stop here for just a second. One more time, remember, we've talked about the importance of mental flexibility and counterintuitiveness. With overnight inventory long and a very prominent point of control, and having seen the market break sharply the previous day, it's very difficult to go long. The trade is going to be go long here because you see the market gaps higher, and you'll see in there's a 116, 671, and 611 inventory count on the left-hand side there. And so that was a break in A period, and it was taken away very quickly, and it did not fill the gap. When you have a gap, the gap trading guidelines are to go with all gaps that aren't filled fairly quickly. The best buying opportunity on an upward gap is on an attempt to fill the gap that fails. The attempt to fill the gap in A period clearly failed, and you can see the volume. But remember, the odds, we defied the odds because overnight inventory is very long with a very prominent point of control, yet the market is higher. The other side of the coin is there was no excess from the previous day. So all trends are up. So this, when you're playing this, replaying it like this, it looks relatively simple when you talk about it. I can promise you it was extremely difficult because of what we had seen the day before, because of the overnight inventory and the very prominent point of control. The trade was to go long. The trade is consistent with everything we teach. However, there's a great difference between what we teach and what you can recite and what you can execute. And it's a lot of times our own weaknesses and our own lack of mental flexibility and, inability to deal with counterintuitiveness can get in our way. So we're going to start this day. The market does gap higher. The trade is to clearly go with the break to the upside. All right, let's continue to play. Let's go at about 30 times normal speed. We're going to play through this very quickly because there's a great deal of similarity to the previous session. What I really want to show you is when we get to the end of the day, I want to show you at the end of the day how things are quite different from what we have been seeing. So remember, we're at 30 times normal speed. We are at new highs at this point in time. Now we have something a little different. The volume is pretty good today. This is pretty heavy volume today, a little different than the previous session. So notice the market came back. They bought it right off the opening, the green dot there, and right off the high from the overnight high. Very mechanical. Okay. So the first period, a little volatility, not unexpected. We're at new highs in the market. Not a great deal of confidence. Remember, we're back and forth. We're back and forth through that opening. We're back and forth through the overnight high. The market tests lower again, doesn't get the single prints. So what this can do, when you're now into the second half hour, this can make you doubt yourself. One more time, we're one time framing higher. Remember, you've got to give markets a little room to move. That first hour came down and through that overnight high a couple of times, and it really tested your resolve. Sometimes traders have placed their stops too tight, and they get stopped out of a day like this. And you've got to expect a little more volatility, and you've got to be a little more flexible. If we can stop for just a second. Too many times, traders stumble with their success because they keep their stops too tight. And they think they're being prudent by keeping their stops tight. They think, well, I'm controlling my money. The truth is you're not. By keeping your stops too tight, you are adding to risk. You get stopped out of good trades, and maybe you get back in, you get stopped out again. That becomes very costly. You lose in those trades, and you lose the spread between the bid and the offer, plus the commission in and out of the trade. So again, your intuition tells you to keep that you're doing a good job by keeping it tight. And the truth of the matter is, you're not realistically dealing with the volatility that's in the market. Okay, let's continue. 30 times normal speed. Markets one time framing higher. Let's go up to about 50 times. Remember, we're going very quickly in here. Volume is substantially better, and it's not overwhelming, but it's better than it was the previous day. So Now, higher prices are doing a better job of bringing in more volume than they were previously. Okay, so we're playing at a very high rate of speed. I want to get to close to the end of the day. We don't need to play this whole day out. There's some similarities to the previous session, but I want to show you some differences right at the end, because remember I talked earlier, people saw the liquidation of the previous day and they start looking for that on this day. And it's a mental mindset that can be very destructive. Okay, so the market is one time framing higher. Quite a bit of volatility in this market. Remember, we're going 50 times, but we've come back a long way in D period. These are difficult days to trade when you get this much variance in volatility in the day. Okay, in this E period, still one time framing higher. Okay, once again, here we are dealing with, they came in and they bought E period right near the D period low. Remember, we had those matching lows and periods before. This is very mechanical buying. This is where you can get very misled. When I look at this, when they buy it so close to the previous 30-minute low, that's a sign to me usually of weaker hands buyers. And it usually is an indication that you're creating an awful lot of short-term risk in the market. Then you look at the D, E, F lows, how close together they are. Okay, so we're still one time framing higher, but I'm not comfortable. Look at the point of control. It's actually a trend day, so we don't have points of controls on trend days. You know, if it goes rotational, it would, but right now, since it's one time framing higher, you don't technically have a point of control. Some people lose track of that. Okay, so we're well into the session. We're going to go over to G period here very shortly. Still one time framing higher. Volume is not outstanding, but it's better than it was on the previous session. So remember, the following day, on April 2nd, we're going to get the monthly jobs report. And that's usually the most volatile day of the year, or day of the month, because there's a lot of hype built into the jobs report. Okay, so we're later in the session, still one time framing higher. Now here's where it gets very difficult. Notice the very narrow range. FGH, you have no excess at the high. Okay, you have stopped one time framing. Let's stop for a second. You have stopped one time framing early in the session. Usually, the earlier you stop one time framing, the greater the odds that the market will become rotational. At the same time, you have no excess at the high. Continue to play, please. Are we at 50 times normal speed?
Yes.
Okay, so we're going through this day very quickly. Again, it's just to show you where traders get in trouble. So the HNI lows, matching lows, again, usually aren't signs of great confidence when they have to have an exact point to build. Notice FGHI. We had no excess on the previous day, but we were only 2 wide at the high. Now we're basically 4 wide. F is a tick away. So we're late in the session. The market's going higher. It's not one time framing. It stopped one time framing once. The HI low were very questionable. Now we get up there and now we're almost 5 wide across the high. You know, J period is just below those highs. So again, when you start talking about the quality of the high, when you have this many periods stopping there, that's mechanical selling. There's no real longer term or even serious selling taking place at that level. If there was, you wouldn't have that exactness. All right, so now those were taken out. in J period. Remember, we tried to break in I period. J period came up and took these out. So we have a chance for an excess high up. Now the chance for the excess high is gone because K and J period are within a tick of each other. So value is higher. We now have matching JK highs. Okay, now let's stop for a second. We're in the final period of the session. So the previous day, traders saw this huge liquidating break in K period, which we've talked about and seen before. Remember, traders have a tendency to do what has worked before. And we talked about, somebody asked the question in the morning when we were doing a webinar, will we see the same thing in K period? And my comment is, remember, was when you start asking that early, you have already made, whether you know it or not, or will admit it, you've already closed your mind to other possibilities. You're looking for a trade. When you're looking for a trade, it usually isn't the right trade. The right trade just kind of appears in front of you. I know that's a tough concept, but when you look for a trade, you'll normally find it, and it's normally wrong. All right, let's continue to play because we're now late in the session. Many traders are looking for that late period liquidation and see what happens here. So you have no excess at the high. All right, so now you get a break in L period. Remember, M follows L, so people still thinking, can we get that late break like we had, the previous session in M period? I may have mistaken earlier thinking it was later than it was, but M period is the last period. Okay, so now you're starting to get a break, but notice you're 3 wide at the high. You're 3 wide, so there's no excess at all. So more than likely what you're seeing is liquidation, not new money selling. Now we're into that final period. We're into that final period. Remember the difference here. The previous day we were 2 wide at the high. Now we're 3 wide. All that people look at the M period goes down and tags the L period low. Just think of people that trade. Oh my God, I don't want to miss this trade. It's a different day. Okay, and there you go to the upside. That's what I wanted to see was that 2 days in a row there were some similarities in the day. The differences were on both days you had a higher value. The previous day you had no excess. You had no excess here, but you were 3 wide. So you were 4 wide before that and then 3 wide. So there was no real sign of serious selling. So in this point in time, and remember, this is the day before the announcement, the market breaks to the upside. Again, we stop at this point. What kills traders and what killed traders, and I talked to several on this day, they got run over because they were looking for the same trade they saw on the previous session. And you didn't get it. You had a little difference today. You had slightly higher value or a higher volume. You had less excess. You had no excess the previous day, but you were 4 wide and 3 wide. So you had a difference in this day. You have to look closely at this. But again, we're going to stop right here. But what I really wanted to stress, just to recap, is if you were traditionally looking at market generated information, the little pieces of information on both days were speaking to us a little louder about maybe getting some counter auction or some correction. When you take a look at the differences here and the need for mental flexibility, is to understand we're at new all-time highs. We're at new all-time highs in here. We've got a major announcement coming up, and we've had no real major give back in the market. So being at new all-time highs is a little bit different. And remember what I said, momentum trading, which is the most prominent type of trading because it's the easiest. Momentum traders, very often the strategies call for buying new highs. Many of us have been taught over years to sell new highs. I've never found that to be particularly good information. Momentum traders buy new highs. For the time they're wrong, they'll be right several times. Anytime if you look at a market, if you go back and do any research, you very seldom see that the market made one new high. You make one new high and then you'll find it made 15, 20 new highs before the auction was over. And I believe right now we're in the 17th or 18th new high in the recent period. So it's something to keep in mind that yes, eventually that high will be the final high. But remember, it's very common to have 15, 20, 25 new highs. And I believe, if I don't know if I remember correctly, but I think there's like 51 new highs on the NASDAQ. So again, it's very important to understand markets and to be able to be mentally flexible. And what I've shown you in the last couple of days, really what I think is late trading by laggard momentum traders. I may be wrong, but it's late trading. You market generated information, you've got clearly higher value. Clearly higher value. Remember, all trends are up. Value, when you look at strict market generated information, is the most important piece of information. You had indications of other areas that on a very short-term basis suggested higher odds of a short-term correction or inventory rebalance, day time frame inventory rebalance, without having mental flexibility. And it's very easy to fight yourself and defeat yourself. Anyhow, thank you very much. This is a very challenging way to end the foundational e-course. What you're looking at these last 2 days, this is very advanced type of education and observation of what can go on in the market. And as I've said, this is the area, as I was learning to trade and learning market generated information, this is the area that caused me by far the biggest problem. And it wasn't something I overcame in a few days. It took me a couple of years to overcome this because I'm fighting myself. Remember, successful trading is market understanding plus self-understanding. So many times, and a lot of times, somebody called me the other day and they said when they first heard me talk about, self-understanding, they thought it was like psychological mumbo jumbo. And they've started to understand now that that's more important than anything else. Anyhow, thank you very much. Great trading.